I want to get more detail now with Swetha Ramachandran, GAM Investment Manager. Swetha, that's an insane number. 52% organic growth for fashion and leather sales, and a super solid beat on the revenue line as well.
Absolutely. I would say expectations were high going into this set of results. The Whisper number was probably expecting sales up in the 40s, but this definitely beats even very handsomely the top end of expectations that were floating around the market. It's quite remarkable. We will need to wait for the regional breakdown, but it's no doubt supported by very strong growth in China as well as the US, which were the two markets that also did very well for the company into the close of last year.
Do they get better from here in that, you know, I'm not in the office, maybe you'll go back to the office, we're gonna have to start dressing again?
Right. So I think that is definitely something that has buoyed people's expectations. The appeal of LVMH really is that it's a diversified luxury company. So there's the fashion and leather goods component, which even in the midst of this pandemic with working from home is performing exceptionally well. But it also has businesses that are very directly exposed to mobility returning, such as the selective retailing, duty-free businesses, wines and spirits to an extent also relies on people going back into bars and spending. And of course, perfumes and cosmetics, where that division has also suffered as people have moved away from color cosmetics into skincare during the pandemic.
So how much more upside? Just to update you on some of the numbers that are crossing overall, Q1 sales look to be up 30% organically year on year. And if we compare it to 2009, it's still up by 8%. Again, those fashion and leather sales, organic growth coming at 52%, and that revenue coming at 13.96 billion euros. How much better can it get? You mentioned the categories where it can get better. How does that translate into a share price?
So I think you hit the nail on the head there with the comparison to 2019, because in some ways comparing to 2020 is a bit unfair given what an unusual year that was. The fact is that these results suggest that LVMH, the fashion and leather goods division, grew by at least the low 20s, if not the mid 20s, over 2019, which again supports the sort of structural growth story that has been building for the company. And I would say what's actually even going to be more interesting than the top line number is the profitability figure, which of course we won't get until July. Given that this company has attacked its cost base very aggressively to withstand the impact of the pandemic, I think there will be some reluctance to spend back into the recovery, which means that the first half profit number that we're looking at could be significantly ahead of consensus expectations as they stand today.
Where do they gain market share?
I would expect the key Louis Vuitton and Dior brands to be the biggest winners in the soft luxury fashion and leather goods segment. It's an interesting fact that about the top 10 luxury goods players earn more than 50% of the industry's profits. This is such a fragmented industry. But in the pandemic, what we have seen is a clear concentration of market share gains with the very top players, and the sort of hyperpolarization of performance between the very top players on one end, such as LV, Dior, Hermes, and Chanel, and the weaker players on the other.
When we talk about earnings in general, the idea, at least here in the U.S., is that we're reaching peak optimism, right? Like, you've seen so many upgrades that beating is going to be hard, that you're just not going to get the same kind of earnings momentum in the rest of the year. And then you get a number like this, where like you beat, it's huge. Is that the story for luxury retail, or is it a different thematic story?
So I think LVMH, even within luxury retail, which has a lot of reasons for optimism, primarily due to the buildup of excess savings among consumers around the world that are waiting to be unleashed as economies reopen, LVMH is very much in a league of its own. So they are winning market share gain, even in a sector which has structural tailwinds driven by the rise of the aspirational emerging middle class, and particularly Chinese consumer. This company really is in a class of its own.
What about tourism? Where are they going to gain with tourism?
It is interesting, I think, that the story of the last year continuing into this year is that luxury has become much more local and driven by local consumers than it ever has been. Historically, this sector used to generate over half of its sales from tourists. Clearly, long-haul tourism has all but come to a standstill. As that recovers, there is definitely material upside, not just in the direct selective retailing business that's exposed to it, but also more generally, as people travel more, they shop more, as there are events and parties to return to, people will be spending more money on clothes and on accessories, and that all of that proves to be quite an attractive tailwind. If we look at Q2 of last year, their fashion and leather goods sales were down 38%. Given the momentum that the year has started out with, I would expect expectations in for the second quarter, and not just on the top line, but especially on profitability, to be significantly upgraded from here.
Parties. I can't even remember when that was at a party last. Swetha, last question. If LVMH is somewhat fully valued, or at least expressing some kind of optimism, is there another luxury retailer that can kind of benefit from this upside that hasn't already been priced?
So I do think there are categories such as jewelry, which are really experiencing an uptake. And I think Richemont is a really interesting name here, where they haven't benefited to the same extent because of their primary focus on hard luxury, and maybe a perception that the watches business is more sluggish, which might be true. But I think their jewelry business, which generates close to 85% of its total profit, is actually materially outperforming expectations.